From the land to Grant University in Urbana-Champaign, Illinois, this is the Closing Market Report. It's the 5th day of September 2025. I'm Extension's Todd Gleason. Coming up, we'll talk about the commodity markets with Mike Zuzolo. He's at globalcomresearch.com out of Atchison, Kansas. Mike will be here, too, for our Commodity Week program, along with Logan Kimmel of WILLAg and John Zanker of Risk Management Commodities. If you can stay with us on our home station, you'll hear all of that program in its entirety over the next hour. If not, it's up online right now at willag.org, and many of these radio stations will carry it over the weekend. During the Closing Market Report today, too, we'll discuss the agricultural weather forecast, and Eric Snodgrass will drop a yield for corn that he's been toying with. You want to stay with us for that on this edition of the Closing Market Report from Illinois Public Media. It is public radio for the farming world, online, on demand at WILLAg.org.
Todd Gleason services are made available to WILL by University of Illinois Extension.
December corn for the day settled at $4.18, a penny and 3/4 lower. The March down 1 at 436.5. November beans at 10.27, 6 lower. January down 6 as well at 10.45.5. Mike Zuzolo at globalcomresearch.com out of Atchison, Kansas now joins us. Hey, first, Mike, what a great Commodity Week program recorded yesterday afternoon with you and Logan Kimmel and John Zanker. Thank you for that. Folks who are listening to the home station will hear all of it coming up throughout this hour. Otherwise, it's up online at willag.org. I thought it went very well.
Yeah, I did too. I think it was very timely and appropriate. And, we really tried to take the bull by the horns, or in this case, the bear by the tail, I guess, when it comes to how to handle the off the combine bushels. And it's a nice way to end the week too, because I think it's very valuable information just because of what the markets did and what they showed us. And specifically, Todd, what we talked about on the Commodity Week program, we did see the December corn get to 424 3/4 for a high. That's the highest since July 22nd. We haven't got settlements as we talk, but it looks like we're going to barely close higher on the corn for the week, and that would be a fourth week in a row. The exact opposite in terms of the soybeans. Soybeans, after actually pulling the corn lower later in the session, and November got up to 1037.25, 2-day high. So you can kind of see this whole week was really about how we closed last week, and that was what was nice about it. It was a consistent trade, that the corn market was more fearful of the short-term supplies. Why do I say that? It's because the September futures were what really drove the bus this week in corn and helped everything else out. Otherwise, the spreads were pretty weak, and we had a couple big trade estimates come out, private trade guesses come out, one on Wednesday, one on Friday, right around the same time period, around lunchtime, after lunchtime, and both of them had the same impact or similar impact as what each other did. It felt like Wednesday afternoon on Friday afternoon, in other words, because by mid-session, the beans were leading the corn lower. S&P Global came in with a 53.8 yield on beans, 4.3 billion bushel production number. S&P Global corn, 189.1, 16.77 billion production number, very close to what Allendale did midweek.
Yeah, so the Allendale was a farmer survey. I don't know whether the S&P 500 or whether the S&P Global was that or not, but those still remain big numbers, and they don't really tackle the disease issue that some believe might be out there. The farmer survey says they weren't sure that this was going to have much of an impact, and I guess we'll just have to wait and see on that one. However, as you laid out as we began this program, and then of course in Commodity Week, the idea that we make it through the fall and farmers are so far behind in marketing both corn and soybeans that maybe it was time to do something potentially, especially because the basis is likely to erode over the next month. Do you have them make moves? Is it something that they should do, do you suppose?
Yeah, I started on Friday in the back end, picking up some carry for on the farm bushels. And I think getting the May up to 450 and the July upwards of 457, 458 area made sense, because that 50-cent carry is worth going after at this point. for what you can store. Still have to get underneath the issue of the off the combine bushels, and that's where next week really comes into play. I really do think that we have, ever since the August report, traded very similarly with the bean-led rally up until this week, like we did last year at this time. And so if we're still playing the similar track as last year at this time, it's got maybe a little bit more up in it at this stage of the game. But then I think we're heading into the next WASDE report with numbers and price action that would suggest to me you've got to feed the bull at this stage and get some good numbers underneath you from USDA. Otherwise, mid-September didn't treat us too kindly last year. And that's a really key issue, as you say, with the harvest right around the corner and basis levels. They could be one of the better levels or one of the worst levels. And it really is based upon geography and where you're at, east of the Mississippi or west of the Mississippi, and whether you're in a flash drought or not in a flash drought. I think that the flash drought and the disease that you just mentioned, the disease specifically, probably one of those places like in Illinois, Indiana, where it looks dry for the next 7 to 10 days, may be okay to leave your basis open, but wouldn't leave both futures and basis open at this stage of the game.
Yeah, so I think the way you laid that out is that September still is hunting corn, and that farmers really have made the decision. They made that sometime back last week, I think, probably, as to whether they were just going to carry it into the new year, right? And so just on the hunt for corn for bushels, and that's holding the marketplace up. You think it can actually hold December or fall delivery futures up?
I don't think the corn can go against the beans and wheat. That's the biggie for me, Todd. It's just not. I just don't think it can happen. And when we're at a point where we've got the U.S.-China trade negotiations clearly, to me anyway, overwhelming and offsetting the continued dry weather and a hotter forecast. That's where I really think next week is about the beans needing to pick it back up again and get the wheat and the soft red wheat specifically off near that 3-year low and stop messing around with not giving us a Northern Hemisphere harvest low. Those two things, if it were Christmas time, that would be on my Santa Claus list right now.
What would push wheat to do that, do you suppose?
I still don't think the numbers are there in the Black Sea. I know the prices are dropping in Paris and in Europe, but I think that's more of a quality issue. I've even heard that Russian quality is not the greatest at this stage of the game. But the trade is so fixed on the Russian ruble, so fixed on the Black Sea private forecasts of a bigger crop potential that we're not able to really get our eyes off of that right now. So that's where I think we'd have to see the change.
What you watching in the livestock sector?
I'm writing a special report, a 2026 protein report. And it's funny, I went back and pulled out my CRB commodity yearbooks and looked at 14, 15, and 16, and we're in the pretty much the same cycle as that time period. And domestic demand is what put the high in back then. And I guess I'm leaning towards that. We haven't done any damage technically yet, but I think we're kind of watching October as a key and crucial month, since that's where feeders tended to make their high back during that time period.
Anything else before I let you go?
Well, the big news was the unemployment rate and the jobs numbers, and it really sunk the dollar to a new monthly low. That dollar continues to support us. That's going to be a major factor here in the next 60 days as well, from an investment standpoint and the export standpoint too, Todd. So it's still up there at the very top of the list as far as what's carrying the water for the bull right now that can't seem to get his legs.
Hey, thanks much. I appreciate it.
You too, sir. Thanks a lot, Todd.
It's Mike Zuzolo. He's with globalcomresearch.com. In today's agricultural news, USDA has revised its February farm income forecast and now says farm income will be up this year. The news from USDA research economist Carrie Litkowski comes as relief after 2 years of declining net farm income.
Farm income will increase in 2025 relative to 2024, and this follows declining farm income in 2023 and 2024.
Litkowski says net farm income is forecast to rise year over year by $52 billion, while net cash farm income is projected to rise over $40 billion. But how's that possible, given such low crop prices?
Most of the expected increase in farm income is coming from higher cash receipts from the sale of animal and animal products. And also, we expect higher payment from government programs to farmers in 2025.
Including new payments this year and earlier approved payments.
Total direct government payments that are expected to be received in 2025 by farmers is forecast at about $40 billion. That's an increase of about $30 billion from 2024 levels.
But cash crop receipts are still expected to be down by 5% year over year, and total production expenses up by just over 2.5%. Separately, the California legislature has approved the sale of E15 in the largest motor fuel consuming state, sending the measure to Governor Newsom for his expected signature. California would be the last state to allow E15 sales. The Renewable Fuels Association applauded California Senate for passing the bill, saying that the state is much closer to cleaner fuel use. Researchers at the University of California, Berkeley and the U.S. Naval Academy said in a report that California consumers may see up to $2.7 billion in savings every year by having E15 available. California is the only state that does not allow sales of the fuel blend. The analysis also finds that a unit increase in octane level results in a value premium of about 11 cents per gallon. California's transition from E10 to E15 could save about 13 cents a gallon on average due to the lower carbon intensity of E15. And finally today, the National Corn Growers Association President Kenny Hartman Jr. testified before members of the trade panel established by the U.S. Trade Representative's Office. He praised the administration for investigating Brazil's trade practices and encouraged quick action to address any wrongdoing. He says, unfortunately, Brazil does not value a level playing field and unfairly penalizes U.S. corn growers. Over the past decade, he says, Brazil has taken target to trade actions aimed at evaporating current and future demand for U.S. farmers. The testimony took place after the USTR office initiated a probe under Section 301 of the 1974 Trade Act to determine whether Brazil engaged in unfair trade practices. U.S. corn growers and ethanol producers once enjoyed a level playing field in Brazil until 2017, when that nation imposed a 20% tariff on U.S. ethanol without provocation. As soon as the tariff kicked in, the market was in free-fall decline for U.S. ethanol producers, Hartman said. And that's a look at today's agricultural news. Let's check in on the weather forecast now with Eric Snodgrass from Nutrient Ag Solutions and Agrible. Hi, Eric. Thanks for being with us again. Let's start with the dry August and the cool weather. What kind of things do you think that might do across the Midwest as it's related to crops?
Well, I mean, the big thing is it probably took the top end off this yield after what has already been a relatively stressful summer for much of the Midwest, especially Illinois, Indiana, Ohio. And don't forget Kentucky and Tennessee, right? I mean, we had such extreme heat and overnight lows for most of summer. And then when the rain stopped, cooler weather came in, but with it, some really dry conditions. And the main culprit is the Bermuda High. It's way off, almost to Africa, which is the big reason why Hurricane Aaron missed, and then Fernand, which was the next one, missed. And while that has all happened, I've got places, not just in Illinois, but also down into the Mid-South that are going on like 45 to 50 days without measurable rainfall. And yeah, some places picked up a little bit of spotty thunderstorm activity just earlier this week. But overall, that rain just came and went and things look just as dry as it did before. So here we are finding ourselves getting recommendations from Trent Ford, my neighbor, the state climatologist. He's a contributor to the drought monitor, and his suggestions are, hey, it's dry. We need to start seeing these values increase on the drought monitor for us. And it's got me concerned, Todd, because the epicenter of this drought is on the kind of the mid-Mississippi and lower Mississippi Valley, then the Ohio Valley, and, the last part of the Missouri Valley. And all of that feeds into the Mississippi River, which back in April was nearly 40 feet above low stage, and this morning is nearly 2 feet below low stage. Now, If it dropped another 7 feet, it'd be where it was last fall at this time. But we don't want to go anywhere close to the dryness we saw last fall. But unfortunately, some of the longer term outlooks are keeping us that way.
You understand the hydrology enough to know how fast that can happen by chance?
I do. So I look at the graphics quite a bit. And believe it or not, during the time of year when we don't have a crop in the ground, okay, when we don't have a crop in the ground, you can get that river to change 10 to 12 feet inside of a week, just with normal rains. Flash flooding events, of course, it can be much more significant. But when there is a fully established corn and soybean crop, and we put heavy rain on the Corn Belt, very little of it gets into the river because the local environment with the root structure of the crop and the way the crop takes in the water, it just keeps it. So that's one of the interesting side effects of having such prolific agriculture around that big river basin, is that even with a wet, stormy summer, the river levels can continue to drop because the crop is drinking it all in.
Okay, so the issue we have is that we've got a crop still drinking some of it in because some of it's green, and we, on the other side, we just don't have rain.
Yeah.
Do we have any in the forecast at all?
This is where no one's going to like me, Todd. I mean, there are chances, but these chances are pathetic. And most of the models that we have suggest that from Oklahoma through Missouri, Illinois, Indiana, Ohio, all the way to Pennsylvania is one of the two big dry stretches across North America. And yeah, there's a front that's coming through. It's a little windier today. And there are some, I mean, it's very minuscule, but there are chances for rain. But unfortunately, we don't have access to open Gulf moisture right now. We've got to wait for this whole pattern to flip around before that occurs. And I'll be honest, through the middle of the month of September, I don't have a whole lot of evidence of more rain. So the net effect of this, Todd, I've got guys over here that are already harvesting. And it looks like the crop's ready to harvest. I'm sure they've made their moisture measurements and they can take it off and get going. So it's pretty amazing to think about where we found ourselves at the end of this season. And I'll be honest, what this will really mean now that the August data are in is that some of the models that are very sensitive to weather when they predict yield, well, I run a version of the Westcott-Jewison model. I run it on my computer, an Excel spreadsheet. It's real simple. And because of the August dryness in the Eastern Corn Belt, we've seen the number come down to 183.5, right? So that's just one number. Do with it what you will. Nobody cares what my number is, but I'll tell it to you anyway, just so you can see the effect of the recent weather and the cool weather that's coming too.
Oh, we care. Everybody jumped about the time you said that. Okay, it's been cool in the month of August, relatively speaking, too. There are some thoughts that this weekend, or at least there were some thoughts this weekend, might cause some issues. I take it you're not worried about it.
No. With the stronger winds, that's one thing that's going to help keep the temperatures from plummeting, much out of the 40s. There's been a frost already in North Dakota, northern Wisconsin, Minnesota have had some morning frosts. But I'll be honest, Todd, the thing that concerns me more was I was given a talk up in Morris, Illinois on, Wednesday, and I brought up a live forecast, and one of the forecast models suggested that by the end of next week, we should be up deep into the 90s again. So, we're going to go from this it's fall, and then all of a sudden we'll be thrown back into the throes of summer. Now, I don't think it's going to get that hot, but I do think we have much warmer conditions coming back in, which is going to stave off any early frost, discussion that we may have and push it into October where it belongs.
Long-term outlook. What do you see in the United States?
Yeah, so just got the new European model data just before you called, and it is attempting to keep fall drier, drier than average. It is not as aggressively dry as we saw a year ago, but drier than average. But it went way more aggressive on the development of La Nina, the European model did, because of how cool the ocean temperatures got along the equator in the month of August. And the trade winds are strong. And so because of that, you can probably recite what I'm going to say next, because we've had 4 of these out of the last 5 winters. When we have La Ninas, we tend to get a more active Ohio River Valley storm track, which means we tend to not be talking about those kind of winters that just build in drought. Now, I said the same thing last year, and where was the storm track, Todd? It was way down across the Gulf Coast, and we were pretty cold throughout the second half of winter. So I would just say, take it all with a grain of salt. Know that every La Nina has a different flavor, but it's calling for drought pressure to build across the southern tier of the United States for us to stay active going forward. And unfortunately, when it looks down at the weather forecast for Brazil, It is not calling for major anomalous precipitation throughout the Cerrado. But southern Brazil into Argentina, of course the model's going over drier because that's historically consistent with La Nina development. But right now, Todd, all of the attention in Brazil is going to be in the next 45 days. How much of the crop did they get planted? And by November 1, are they almost done? And so we're going to have to watch the daily rainfall event and forget about the seasonal forecast for Brazil just to know if they get going quickly, and open up their crop calendar.
All right. Hey, thank you much. We'll talk with you again next week.
All right, sounds good.
It's Eric Snodgrass. He's with Nutrien Ag Solutions, and Agrible joined us on this Friday edition of the Closing Market Report that came to you from Illinois Public Media. It is public radio for the farming world. If you can stay with us for the whole of the hour this afternoon on our home station, you'll hear all of our Commodity Week program. Otherwise, it's up online right now at willag.org. Commodity Week is next.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Logan Kimmel. He's at Roach Ag out of Naperville, Illinois. John Zanker is here with Risk Management Commodities, a division of Zaner Ag Hedge from Lafayette, Indiana. And Mike Zuzolo joins us from GlobalComResearch.com in Atchison, Kansas. Commodity Week is a production of Illinois Public Media. It's public radio for the farming world, online, on demand, anytime you'd like to listen to us. Let's get started with a list of items that we should discuss today from each of our panelists. Mike Zuzolo, I think we'll start with you today. What's on your list?
Well, we still feel like that the corn market is still trying to hold everything together at this point, Todd, but we're running out of runway with harvest quickly approaching, and we need some support from the soybeans and especially from the wheat here. But I think one good thing about Thursday's close was weather still matters, crop weather still matters. It seemed like things really changed in terms of short-term bias in the trade after the noontime models came out. So that's kind of probably where the next 30 days is going to be something we need to talk about.
John Zanker of Risk Management Commodities, on your list for the discussion today?
Well, I think this southern rust issue, especially in Iowa, is it might be more than we previously thought. I've been a little bit skeptical as far as it having a huge impact, but after a conversation here an hour ago with our in-house agronomist, who just got back from Iowa, my concern over that issue is growing. And then on the other side, for soybeans, geez, where's China? Least amount of sales on the books since 1999. So, and we're running out of time. Something needs to move on that pretty quick.
And finally, Logan Kimmel at Roach Ag. What else might we need to take up?
Yeah, spent last week there, 3 days at the Farm Progress Show. Had a lot of conversations with folks, I-states primarily. So I'd be glad to share my insights on what they're seeing on their crop development here in the latter stages of the growing season. What's changed here from maybe a month ago. Also had a lot of conversations and questions on, hey, what should we be doing marketing wise now on this new crop coming into harvest? A lot of folks sitting maybe undersold. So we have to go over that and conversations I had here last week.
Logan Kimmel is with Roach Ag, joined us on our Commodity Week program. If you can stay with us, you'll hear all of that program coming up next. Otherwise, you can hear it online at willag.org right now in its entirety. I'm Extension's Todd Gleason.